Okay, can you see my screen? Can you all see my screen?
Yes, sir, we can see it.
All right. So, without wasting much of our time, let's get to the point. But before that, I want to sincerely appreciate my brother, Mr. Amole Ayodeji, for being an amazing brother, for giving us this platform to help ourselves grow.
Do you get the point of what I'm saying?
I want to thank Coach Tony and Philip. They have been an amazing coach to me. I've learned a lot from them. So thank you all. Thank you all. So I don't want to waste much of our time. What we want to discuss today is not about charts, and it's also about charts. What I'll be talking about is majorly based on our psychology. How we handle things. Because
Psychology,
this, please, if you are in a noisy place, you can mute yourself. If you are in a noisy place, you can mute yourself. All right. So here we go. So now you have to understand that when you are talking about the forex market, you are like a fish, a little fish in an ocean. You have to have that at the back of your mind. Because when we are talking about the forex market, you are talking about a market worth of $6 trillion a day. $6 trillion a day. Let that sink in. $6 trillion in a day. Forget about you trading synthetic or whatever. It's still like the same because you cannot move the market. And the funny thing about this market is that you do not even know those that control this market. To your greatest surprise, the government are not the one that are controlling this market. I hope you understand. If you know what is happening currently of Bitcoin, you know that the government or some companies are not even the one moving the market. You don't know them. So that means you are coming into an industry that is very, very wide, that if you are not careful, you are going to miss your way. Which means you have to know what you are doing. You have to know what you are doing. Just like, let me give an example, just like being the first time or you are going to computer village in Lagos. You know how you should be very, very careful with your things. You know how it is because the market is full of varieties of people that you don't know. So you have to be very, very careful. The way you move, the way you speak, the things you do. If care is not taken, you even have to premeditate them before you do them. So some people feel like before they go to this computer village, they know how they are going to hide their things. They know the position they are going to place their bag. It's the same thing with trading. You cannot just wake up in the morning and open your chart and feel like, okay, I want to buy this, I want to sell this. No. There are some things that should be in place before you saying that you just want to enter the market, you just want to buy, you just want to sell. Do you understand? So we are going to be talking about those things, and I'm going to be showing you majority of the mistakes that lots of people make and the few of us that are very successful in trading, the things that we consider. Because clearly, you cannot know it all. You cannot know it all. So, I'm going to start with what the majority of people think when we are talking about this forex of a thing. But then let me make something clear. So we are going to be talking about your belief system. because you don't trade the market, you trade your system. You trade your system. We have indicators traders, we have smart money traders, we have trend line traders, we have support and resistance traders. All these are good. If you know your way around it, you are going to make money, you are going to be profitable. Do you understand? Because there's no strategy that is 100%. No, you can't find it anywhere. Smart money concept also has its own disadvantage. Smart money concept also has its own disadvantage. So don't feel like maybe someone is trading support and resistance, you are trading smart money, you are better. No. The person can be making money and you that you are trading smart money, you are losing money. So which means you have to understand what you are doing in the market. So the first belief system of majority of the people is this. I hope you are all with your pen and paper. Please, if you do not have it, get one. Please get one. You don't want to miss this class and you don't want to miss the things that I'll be talking about. Choose the right investment. So let me talk about this very quickly. Because Mr. A is trading boom and crash does not mean you also should trade boom and crash. Because someone is trading big 75 does not also mean you should trade big 75. Which means you have to choose the right investment. When we are talking about choosing the right investment, is the funny thing is that it's not even about the assets you are trading. When we are talking about choosing the right investment, the right investment is you. The right investment is you. Some people feel like because this guy is making money on Crash 500, I also want to trade Crash 500. But there's a lot more to him making profits from Crash 500. So when we are talking about you investing in yourself, it means you studying. It means you mastering your strategy. It means you spending a lot of hours on the charts. It means a lot of things, but it's solely based on you, not on what someone is doing. You want to copy what the person is doing. Do you get? We have people that are trading Bitcoin and they are making money. And we have people that are buying Bitcoin and keeping it, like investing, and they're also making money. So it means that you have to understand yourself and understand where you stand. Don't just feel like because someone is doing this, I also must do it. No. Invest in yourself to know yourself better before choosing any asset to trade. I hope you understand that. The next one I have here is the mistake that lots of people do is market eventually goes up or down. We have a lot of people that feel like because this guy is buying, I also just want to enter the market and buy. That's the majority of what a lot of people do. You see, when trading the assets, when trading an asset or when trading at all, you have to understand that entry will not always show up. Entries will not always show up. This means that you have to position yourself in a way that you should be disciplined enough to see when the entry shows up and to be able to wait when the entry is not there, even if the market is going in your intended direction. I hope you understand that. If you are still with me, you can just drop one in the chat box. Let me see. If you are still with me and you understand to this point. Okay, okay. Yes, I also want to try to make it open, but don't worry. I'll always allow you people to join. Don't worry. Mr. Samuel Adebayo, don't worry. I'll always allow people to join. So understand that markets always move up and down, but you do not have to always enter the market whenever you see it going up. There are some certain things that you should be looking out for. You should be disciplined enough to wait for those things to align before you entering the market. This is one of the reasons why people blow their accounts. You are seeing the market going up and you are just entering the market. You don't know where the market is going. You don't know what can make the market turn back down. And you just feel like, oh, it's going in my intended direction. Let me just enter the market and make some quick cash. No. On the long run, if you are very lucky with one or two, on the long run, you are going to blow your account. That's the bitter truth. You are going to blow your account. You feel like you make the $100 at the first time, you make the second time, you also make another $100. I feel like, oh, this is going to be, and by you see the market going up or down, just enter the market. You are going to lose everything. You are going to give it back to the market. There's no how. There's no how. So the next one that a lot of people also are guilty of is I can't be wrong. You see, when we are talking about this market, accept that you can be wrong each time you press a buy or sell button. That's why you have a stop loss. That is why you have a stop loss. Accept that you can be wrong each time you press a buy or a sell button. Because if you do not accept it, it's just like it's an investment. It is a business. Trading is a business. You get it? So don't feel like I must I must win every trade. No, you will not always win all your trade. That's why our brother, Mr. Amoli, he showed us his trade history. We saw that he made some losses, but the wins were way more than the loss. That means he accepts that he can be wrong and he accepts it. That's how you should think about trading. Each time you enter the market, accept that you can be wrong. This will make you feel like, okay, if I can be wrong, then where should my stop loss be? Newbies or new traders feel like you can control the market. No, you can't. That's why you have to always use stop loss. Stop loss is always there to save you. That is why you have to always use stop loss. In fact, when you get to a certain point, you will discover that you should not be in any trade without knowing where your stop loss should be and putting your stop loss in place. You have to understand that. You have to understand that. Always use stop loss. All this that I'm still saying is just like you painting a picture in your head. You painting a picture in your head that this is what I want to do, this is what I want to do before entering any trade. Any trade. So I hope we understand up to that point. If you are with me, let me know. If you are with me, please 111 before I move to the next point. All right, thank you. All right. So this is what the majority of people do, and just few people, just few, or let me say the few, this is what they do to become profitable. Trading is a profession like any other. Or let me put it under it so you can always see this. Trading is a profession like any other. Like now, let me just put it to us. If you are in a company, you know that we have something we call budget reviewing. We have what we call the board of directors. They do meetings almost like every Monday. They pick some certain times that they have their meetings. I hope you understand. I hope you are with me, guys. So if you think that you want to trade and you are not having a little time or a quiet time to meditate, to review the things that you are doing, you are not going anywhere. That's just the truth. You are not going anywhere. You have to treat trading like a business. Imagine you opening a shop and you are selling every day. You have to have a record book of your expenses, of your expenditure, of how money is coming, what you are selling, how much you are making on certain products, you know, all those kind of things. The same thing applies to trading. Same thing applies to trading. So you don't just want to feel like, oh, because I can just make quick money on my phone, I can just press a buy and sell button, and you are careless about, you know, you shouldn't be. It shouldn't be. You should treat trading as a business. I make certain loss. Why? Okay, this is my mistake. Okay, I'm going to learn from it. That's how you get better. That is how you get better. Okay, you are trading now. Do you have a record book of all your trades? Each trade that you are entering, maybe it's about time for you to sell crash 500 and you're feeling like, what are you seeing on the higher time frame? What are you seeing on the lower time frame? Have you seen a break of structure? Have you seen accumulation or distribution? You have to pen all those things down. So even if you miss the trade, you feel like, okay, this is one of even if the trade hits your stop loss, you feel like, okay, all my checklists were in place. This is it. I can see it clearly, but you know, market just feel like it's going to take me out. No problem. But some of us, if you request for your trade history, in fact, you cannot even explain why you are buying this or why you are selling this, and you feel like, okay, market just kicked me out. Market took my money. I blew my account. No. So you have to treat trading as a profession. There's nobody in the waiting room. There's nobody in the waiting room, please. There's nobody in the waiting room. Everyone in the waiting room might be accepted. Nobody. Okay, so that's one. Number two, trading is a game of probability. Or let me focus on risk to reward. So trading is a game of probability. The best setup can hit stop loss. The best setup can hit stop loss. So that's why you have to think like trading is a probability. So you have to know that, okay, if I'm trading and it's a probability, then how much am I willing to risk? How much reward am I willing to get? On every trade, your first reward, your first TP should always be your 1 to 3. I know when people hear 1 to 3, it sounds like you are scalping, but believe me, you are not, because on the long run, it's doing something to your account, which we call compounding. It is compounding your account. So if you are feeling like, okay, I have $100 account, I want to trade, and you have the mentality that, okay, trading is a probability, the best of trade can hit stop loss, the best of setup can hit stop loss, then okay, how much am I willing to risk per trade? So in this place, there's no how. You have to review your risk management. You have to review your risk management. How many percent? Is it 1%? Is it 5%? Is it 3%? Is it 2%? Is it 0.5% that I'm willing to risk per trade? So if I'm willing to risk 1% per trade, and maybe that 1% is giving me like $5. And when you are doing your chart markup, you discover that, okay, this setup, for me to be able to place my stop loss outside the range, that means I'll be risking $6, $7, or $8. For me, what I do is I'll let it go. For me, what I do is I'll let it go because it's not within my defined stop loss. So, because the market is full of abundance, I know that there will surely be another setup. It will only take what? It will only take time and patience. So if you have time and patience, there is no how you are going to see another setup. There is no how you are going to see another setup because for me, you can see a setup as giving you as low as $2 risk. Some will give you $1, some will even give you just 90 cents. It's true, I've done it before. My big 75 trade just gave me just 90 something cents. It was not even up to $1. And now I'm riding on almost $80. So it's not about you thinking that I must risk a lot. This trade must go in my way. No. If you are patient enough, you are focused enough, you will surely see that trade. You will surely see that trade that is going to give you your defined risk. If you are risking $2, you see a trade that is going to give you that $2 risk. Do you understand? So don't feel like it is a must, it must be in every trade, even though you are seeing that it's way more than what you should be risking. No, that's not how to trade. The few people don't trade. In fact, there was a time that I heard from a ex-bank trader that said these people, the people that move the market, the banks, the institutions, in a year are only looking to make 30% profit on their capital. Just imagine that in a year they are looking to make just 30% profit on their capital. So who are you to feel like you can make 100% in a day, 50% in a day, 300% in a month? Yes, we have people that are doing it, but is it realistic on the long run? Have you mastered yourself? Have you mastered your psychology? Have you mastered your strategy to that level? If you are, then it's all good. But if you have not, you have to sit down and think. You have to sit down, close your eyes, and visualize how you want to see the chart. So even if the chart is bringing some other things up, you already know what you want to see is in your head. So until you see that thing before you pull the trigger. I hope you understand. Until you see that thing before you pull the trigger. So you have to understand that also. Number 3, accept that you can be right with your markup and still be sent out of a trade. This, a lot of people feel like you can see a lot of trade. I don't know if you have done a lot of back testing. There will be some trade that is going to whip you out and still later go in your direction. That will still later go in your direction. This means that you have to understand that you cannot move the market and you have to position yourself in a way that even when this kind of a thing happens, you are not affected emotionally. You see, what the People that move this market, what they ride on is not that much. They ride on your greed and they ride on your emotions. Greedy people will always get burnt. Emotional people always get burnt. So you have to eliminate these two people, these two things, and see the market for what it is. If you can bring yourself to that state, you are going to trade better. Believe me, you are going to trade better. This link is going to expire in less than 8 minutes. So I'm going to send out another link because there's still a little bit of things that we have to cover. So you have to understand that your markup can be very, very interesting, and yet you are still going to be sent out of the market. It's only telling you something that you do not control the market. Especially those of us that are trading, what's it called, synthetics. We have seen a lot of it like that they are going to weak you out, stick close within structure, and then continue going your intended direction. Those kind of a trade, leave it until it presents another opportunity for you to enter the market. That's how to trade it. Believe me, that is how to trade it. So I just want to make just 3 points at this point for you guys to understand that if you have this belief system, it will be very, very hard for you to be growing your account. Believe me, it will be very, very hard for you to grow your account. So what pushed me to hold this call is about someone that took a trade with a little equity on Crash 300. You see, you have to understand these assets. You have to understand how volatile they are. You have to understand your accounts, how much you are having. You have to understand how much you want to risk and how much you are looking to get from the market. All these have to be in your trading plan. So if I have a $50 account, I'm still telling people, if you have $50 account, you have no business trading boom and crash. That's the bitter truth. I'm not saying that you cannot grow it. I'm not saying that you cannot move to perfection with it. No. But if you ask yourself, how much am I willing to risk on a $50 account to trade boom and crash? You can see a setup that is going to give you 20-point stop loss. You can see a setup that is going to give you 10-point stop loss. But how patient are you? How disciplined are you to wait for it? So all these things, you are not even yet on the chart. You are still just doing the paperwork. Which means you have to review the assets you are choosing. You have to understand why I'm choosing these assets. And even before going live, you have to understand its movement. How is it moving? Do they respect structure to a level that we can feel like, okay, with the little knowledge I know about structure, these guys are still respecting it? So all these things, you have to sit down, spend a lot of time, a lot of resources to understand it. You have to understand it before even open your chart. See, this is where you are trading. In fact, going to on the chart is not the trading. This is where the trading starts. Just like you are going to work, the moment you step out of bed, you start brushing your teeth, taking your bath, putting on your clothes, that's when the work has started, not until you get to your office. So you have to know that all this starts from the paperwork. Have you ever seen someone that just wake up in the morning and feel like, okay, I want to build a house, and they just say like, okay, bricklayer, just come lay the block here. They have to do the paperwork first. That's where architecture comes in. They have to do the paperwork first. See, you have to treat trading as every other business. Who is it that wants to set up a company and is feeling like, okay, I just have the money, I have 100 million, okay, I want to build the company. You have to sit down. Who are my competitors? What is it that I want to do differently? How is my company going to be different from all these guys, and I'll be able to see my own customers, and they're going to believe in me, in my products. All these things, you have to do the paperwork first. So you get, so please make sure that if you are trading any equity, how much you are willing to risk. The asset that can give you that kind of stop loss Know it. Understand it before going live. This will save you a lot of stress. This will save you a lot of stress. You cannot just wake up in the morning. I know a lot of us have like, see, it's greediness that is doing you to have more than 3 assets that you are trading. That's the bitter truth. It's greediness. If you are trading more than 3 assets, believe me, it is greediness. It is greediness that is doing you. 1 asset, 2 assets, 3 assets is enough. In fact, 2 assets max 2 assets is enough. Because how are you coping? You are looking at so many things at the same time. You want to do your markup after you finish doing B5, you are on to C5, you are on to C1000, you are on to B3. It's stressing. You are stressing yourself. You are going to miss things up. You are going to miss the perfect entries. You are going to miss the perfect trade setup. No matter how good you are, try and limit what you are trading. That is where you are going to get more. Trading fewer assets will give you more. Greediness is what is doing. That's why you feel like the chart is always moving. I want to trade everything because it is moving. You want to make money, right? But what about if you stay on an asset? You can wake up and feel like, okay, this month I want to trade VIX 75. Next month I want to trade VIX 10. And for the whole damn month, people will be telling you, okay, I'm seeing this. You feel like, okay, I'm not there. This is what I'm trading. This is what I'm seeing on what I'm trading. That is discipline. That's where you're going to get a lot of money because you know that you are doing your review. I think I said something else about trade reviews. You are doing your reviews every week. And by the way, that's what you should be doing. You should be doing your reviews every week because that's if you are making money constantly, you have to be very careful. The top is very slippery. The top is very slippery. You can have $10,000 account and blow it in a day. It's very, very possible because if you are not careful, greed is going to set in. You are going to feel like you have known it all. You are very perfect with it. You understand? So you have to sit down, review the market, review your trades every week. This is how you get better. This is how you get better. Are you guys still with me? Okay, someone said, what if you are a swing trader? How many assets should you be trading? If you are a swing trader, if swing trader means that you can even still you can trade 1 asset. One of my bosses last week didn't take any trade because what he was trading didn't present any trading opportunity. And he's always on chart. He was not taking any other trade except from that asset that he's trading. And since he didn't present any opportunity, he didn't trade. Even if you are a swing trader means that you are taking a trade like once in 2 weeks, twice in 2 weeks. That's what swing means because you know that once I've entered this trade, I just want to forget it. I want to leave my phone for a very long time. You know, there are some trading that you see like, okay, I've entered now. Before this thing can get to my TP, it should take like 5 hours. It should take like 6 hours. It should take like 2 hours. It should take like 2 days, 5 days. You should be able to visualize it. That means you have mastered the assets. So it's not about you should stay